In today's video, I'm going to show you a simple and efficient way to set your stop loss. Let's get started. Positively Weird asked me a very good question and he said, quote, if I place an order at a specific price and it's filled, how can I make sure that I don't take a loss if suddenly the price drops significantly below the order I just placed that was filled? End of quote. That's a good question, and I will try to do my best to answer and give you some additional trading tips. Okay, the first thing you need to understand as a trader: losses are part of the business. You can't possibly actively trade and hope that all of your trades will go well. That's just not gonna happen. What you can eventually do is set in a stop loss so you can protect your downside in case the trade goes against you. So I'm gonna show you 3 simple steps that I am actually taking before setting up my stop loss. Step number 1, we need to identify areas on the chart where the price is reacting. It could be a support level, a resistance level, and it could be a range as well. Step number 2, choose where to enter the market, where to buy if you go long in a position, or where to sell if you go short. Step number 3, set your stop loss according to the 2 previous parameters. Here we are looking at Chainlink versus the US dollar on the daily chart, and the first step we need to take is to identify where the price could react. I would probably say in this area over here, previous resistance became our support here, and then we have this rejection followed by this pullback, and we have this second pullback. Now we know that this area is an area of value where the price could possibly react and make a reversal. The next step is to set our entry. In this case, we want to go long and try to catch the next pullback. So let's say that this green line is our entry. This is where we will set our buy order. So we set our buy order. Now we need to calculate where we should put our stop loss. One way you can do that is by using the average true range indicator, also known as ATR. The average true range is a volatility indicator that shows how much an asset moves on average during a given period of time. If you are using trading views, you need to go to this icon FX and click on it and search for ATR, then click on average true range, and when you do that, it should appear at the bottom of your chart. If you are using another trading software or you are using a chart on an exchange, you can find the ATR under the indicator tab. Just click on it and search for ATR and then choose ATR, and it should appear also at the bottom of your chart. Let's get back to our chart so we can see how we can use the ATR. So what we're going to do is we're going to take the lowest and most recent price in this range minus the value given by the ATR. In this case, this lower wick is our lowest value, and it is equal to $11.42. So we're going to take a note, $11.42 minus the value given by the ATR, which is equal to 98 cents. So 11.42 minus 98 cents equal $10.44. The value found represents the price where we are going to set our stop loss. In other words, we will exit our position if the price drops below $10.44. So I'm going to draw a horizontal line and make it green, and I'm going to draw another horizontal line and make it red and adjust it to 10 $30.44. So the green line represents our buy order and the red line is our stop loss. So we want to place our stop loss below this support level and we want to give it enough space so we won't exit our trade too early if the price drops down below the support area and reverses back to go higher. Comment below if you have any question, and if you like this content so far and you want to learn more trading tips, check out my free trading class. You can find the link in the description below and it is absolutely free. Let's move on to the next example. Here we are looking at the Bitcoin example on the daily chart and we can clearly see that this market is on an uptrend. Step number 1, we need to identify where the price is reacting. I would say in this area over here where we have this first pullback and this second pullback. Now we know that this range is an area of value where the price could react and possibly make another pullback. Step number 2, we need to set our entry. In this example, we want to go long and we want to catch the swing in case the price reverses. We don't want to buy at the market price because we already know that the best spot to buy is in this area of value. So let's say this green line is our buy order. Now we need to set up our stop loss. We're gonna do the same calculation. We're gonna take the most recent price at the bottom of this range at our support area. In this case, it's gonna be 1119 Satoshis minus the last value given by the ATR. In this case, it's gonna be 139 Satoshis. So the lowest price on the range minus the value given by the ATR. So 1119 Satoshis minus 139 Satoshis equal 980 Satoshis. So we're gonna do the same as we did before. We're gonna draw a horizontal line which will represent our stop loss. We're gonna modify the value. We said 980 Satoshis. I'm gonna click on OK. And then we will draw another horizontal line which will represent our buy order. So the green line is our buy order and our stop loss is this red line. Let's do a third example, and this time we will short the market. Here we are looking at waves versus Bitcoin on the daily chart. And let's say we want to take advantage of this bearish momentum and short a position. The first thing we need to do is to look where the price is reacting. I would probably say over here, and we can clearly see that the bears are in control of the price. So we have this big bearish momentum, and just at this support level, buyers stepped in, pushed the price higher, but we have this big wick. This wick is telling us that the sellers came back and rejected the price. And as a result, we have another bearish candle, which is breaking through this support level. Second step, we need to choose our entry. This time we're selling, and I would say we will sell right at the market price. So our selling position is right here. Next, we need to set our stop loss. So that's gonna be a buy order at a higher price, and we're gonna do the same calculation using the ATR, but this time we're gonna add the value given by the ATR to the most recent and highest price on the range. So we have this range of price, and the most recent and highest price on this range should be the top of this red candle. So we're going to add this value, which is equal to 30,483 Satoshis, plus the value given by the ATR. 3,585 satoshis equal 34,068 satoshis. So I'm going to go ahead and draw a horizontal line to illustrate my stop loss. I'm going to make it green, and I'm going to change the value to 34,068. So this is our buy order, this is our stop loss, and I'm going to do the same for our sell order, which is going to be here, and I'm going to make it red. Now it's the opposite. Our buy order, which is the green line, is our stop loss, and the red line is our sell order, which is our entry. Another few tips for you guys. You need to understand that in trading, nothing works 100% sure all the time. Think of it as a probability game where you have 40 to 60% win rate and 40 to 60% lose rate. When you know that, you need to take the strategy, back test it, see if it works, and then apply it. Thank you so much for watching my video. If you are new here, subscribe to the channel, hit that bell icon, and smash that like button to support the channel. Thanks again, and as always, stay peace. Ciao.